How's it going, everybody? It's Farouk here, and I want to kind of take you through, price action strategies as it pertains to spread betting and binary options. And I'm also going to kind of show you how candlestick patterns work in terms of how to identify trends. Now, this is going to be very lucrative for you if you're, looking to make some bank off of spread betting and binary options. You could use this for. I highly, definitely, almost more likely than not, recommend spread betting and forex trading more than binary options, of course, for obvious reasons. And that being, in binary options, you could have the correct prediction that it's going to go down, but you never know when it's going to retrace back up. And in between the, let's say, 1 hour expiry time that you purchased your option, it could retrace up and close out of the money and then continue down to where you thought it was going to go. And that's the only reason why binary options is a little more risky, in my opinion, of course, than forex and spread betting. Spread betting and forex, you can actually place stops and limit orders to kind of mitigate and be able to manage your money correctly and properly. So what I want to show you today is, a 15-minute chart, Euro USD. Let me just adjust this a little bit here to take out auto scroll. Auto scroll's already out. Okay. And okay, so what you want to do is, first of all, I have this indicator called a multi-time frame stochastic indicator. I got this for free online somewhere. I don't know where it is, but I'm gonna make sure I post it in the group so you guys have access to it. Basically, what this does is, this indicator gives you the opportunity to show the stochastics on a different time frame, what it looks like on a different time frame than the time frame you're looking at. So for example, for the 15-minute chart, it'll show you, you can adjust this, of course, this is the 1 hour stochastic. So this will kind of show you what the 1 hour stochastic is doing. Now I'm getting really pissed off with this thing right here. 1 second. Sorry about that, folks. I just keep getting an alert, and I thought I turned all my alerts off, and it's still off, so you might get a few alerts here still. Just ignore them. So anyways, back to this. This will show you what the 1 hour or any other time period stochastics looks like in any time frame you want. So for example, for 15-minute, you can adjust the time frame to 60-minute stochastic to show you what the 60-minute stochastic is doing, so you can place your trades based on that. You can even do this, let's say 30 minutes, and it'll adjust the stochastics to show you what the 30-minute stochastics is doing. And this will kind of help you time your trades, and I'll go over that in a second. And it'll also help you with spread betting. So with the 15-minute, 5 and 15 minutes, I recommend using the 60-minute stochastic. So you basically adjust it. You go to time frame and you put 60. And now remember, when you're putting this on, now I can't give you basic training, meaning how to get your indicators onto MT4. And if you are someone that has no idea, then post your comment in the comment section, post it up. By the time I can even answer you, someone will probably answer you and give you advice as to how to install these indicators onto MT4. Now I'm using MT4 because it's just an example. I can't install this indicator onto Thinkorswim, and MT4 is quite faster, so I'm using MT4. First of all, when you get this stochastics indicator, you edit it. When you install it, you're going to install it from here. Make sure you press Allow DLL Imports, check mark it, go to Inputs, and check mark or just double click it so you can adjust the minutes that you want it, and make sure it's 60 minutes if you're using a 5 or 15-minute chart. Okay, K period, this is going to be set to 5, change it to 11. Alright, and everything else you can stay the same. If you want, you can change the colors and width of the lines and all that stuff, but for now you can just leave that and just press OK, and it's just going to look something like this. Alright, so and also you can throw in, just to tell what trend it's currently in, you can throw in a 50 EMA and a 200 exponential moving average. This will basically show you what trend it's currently in. So if it's the 200 EMA, which is blue, over the 50 EMA, which is green, then it's in a downtrend. All right. And if it's green over blue, then it's in an uptrend. Okay, so green crosses blue, it gives an uptrend. Blue crosses green, it goes into a downtrend. Some trends are bigger than the others. Now, if you want a better predictor or a faster predictor, you can even add in 100 EMA to this. Let me see here. Just go to moving average and just the 100 exponential moving average. Now, you might have it at close. I do median price. It's almost the same thing anyway. But then you add that in. Oops, forgot to edit the color. This is the part I like because I like colors. Should we do yellow? All right, we'll do yellow. Okay, so when the yellow is above the green, then it's in a downtrend. When it's yellow is below the green, it's in an uptrend. And as you can see, it's a faster indicator than the 200 moving average of the trend. So let's just take this out for now just to keep this clean and use the 100 EMA and the 50 EMA. Okay. And this will basically show you the trend. So first of all, you have to make sure that you have your support and resistance in line. All right. So right here is support, and this is a good place of resistance. All right. You have these levels in mind. Number two, you kind of want to also take this crossovers as a cue. So what this is telling you right here on the 1 hour stochastics indicator is that this is overbought, and when it crosses, that means that it's going to go down at some point. Okay. Now this doesn't work 100% of the time. I'll show you examples of when it just continues in a trend. Okay, when it's trending, the stochastics will this will not necessarily work 100%. And this is the good thing with spread bets. Spread bets, you can go in and out of the market easily. So right now I'm having a problem with IG markets because I can't figure out what my password was. So I have sent them an email for support to find out exactly what it is. But basically, let's say it crossed over here, okay, and you were right here. This is a quick 20 pips right there. So if you purchased, let's say, $1 per contract, you would make a cool 20 bucks in this move. All right, in 25 candles. Now remember, with IG markets or Forex, you can purchase up to $10, $20, $100 contracts, $1,000 contracts if you want, if you have the capital. Right now I'm at the level where I'm doing $10 contracts, so this move right here would have been 200 bucks for me. Okay, so this where it says 203, that means 20 pips, or 203 micro pips. And that 20 pips times $10 per contract equals $200. All right, and you could basically do that over and over again if you want. So when you see this cross again, now I don't take these trades unless it's coming from overbought or oversold section. So this is an overbought section. All right, and also it's even better when there's a support or resistance close by to where I'm taking my trade. Okay, so then over here, I wouldn't take this trade, but I'm just showing you an example. Let's say it came down here and it came close to oversold and it crossed. See, when it crossed, you could have taken a call trade, and you could either run up until you see the first 2 red candles, or you can run up until it gets to the opposite side. So from oversold to overbought, you can do it either way. All right. Now sometimes, remember, it'll go to overbought, but it won't go all the way to oversold. Okay, until it creates new levels in the market, and I'll show you that in a second. So I wouldn't advise getting from oversold and waiting to sell it for overbought. The way I like to think of this is I'm going to take Paint right here. Actually, let's use Excel. Where is it? Why isn't it working? Why are you doing this? No! Why is this happening? Oh, this friggin'... Alright. Okay, this is just an Excel spreadsheet my son was just playing around on. I'm going to show you how you should take spread betting and when you should close. Remember, be disciplined, and you will get far in this game. Okay, don't be greedy, don't be selfish, even though by nature that's what we are. Okay, this is not working for some reason. This is buggy because of my cam studio, so I'm just gonna have to use something else here. Man, oh man, nothing is clicking. Alright, you know what? I can't do this. I can't do that right now. So basically what you want to do is determine how many pips you're looking for. Okay, I usually, if I'm scalping, day trading, I'm looking for 20 pips, all right, per move. All right, if I'm going to take a trade, I'm not going to get out until I have 20 pips in my pocket. All right, and if you are less risky and more conservative, you're going to put a stop loss. So let me take you through an example of a spread betting example. All right, so for example, let's say this crossed over and you took a trade at this green candle. All right, your stop loss, this is at 12495. So let me let's say you took the trade. Oh my god, my computer's going so slow, it's torture. Okay, let's say you took the trade right here, 124912, and you want 20 pips. Okay, that means you want 12471. Right around here. Okay, 20 pips. Okay, so it's close to 20 pips anyways. It's a little less than, it's a little more than 20 pips, but see, this right here is 20 pips. Now when I draw this, what are you doing, you goddamn computer? Sorry guys, pardon the expletive, but my computer is going deathly slow, and it's been really great all day, so I guess I've been drinking it. So as you can see here, 202 micro pips, okay, which is about 20 pips. So what you want to do is when you go into your broker, your IG Markets or Nadex, or whatever it is that you're using, and when you place your order, put a limit order of, you know, whatever your threshold is. If you're betting $10 per contract, you know, that's good money right there that you're risking. So put in an order for $10 per contract, but then say that I'm going to limit this to 20 pips, meaning at 20 pips, when it gets down to 20 pips in your favor, it'll automatically close out. All right, now you don't have to do 20 pips, you can do 15 pips. I usually also put a stop in there for a 1-to-1 ratio, or sometimes a 2-to-1 ratio when I'm not as sure. Okay, so that means that I would put a stop in here if I didn't think, because this is ranging, I would have been a little less risky. So I would have put a stop for 10 pips. Okay, so that means $100 I would have been able to risk. So from 12491, I would be able to go down 12501. 2501. Okay, I would have been willing to go down till here, and obviously I would have been stopped out because it's ranging. Regardless, I probably wouldn't have taken this trade, and I'll tell you why. Because number one, you're already in a downtrend, and you're in a downtrend, but it's been a long downtrend. So this at some point is going to be exhausted, and especially when I see that it's crossing over when it's ranging. I wouldn't have taken this trade because it's ranging. I don't take in ranging markets. If I seen it here, cross over here, I probably would have taken this trade. Okay, but because I know that it's ranging and I take the trade here when it crosses, I wouldn't have taken the trade. However, see, you don't need, you know, stop losses are not necessary. If you're confident in eventually it's going to go down kind of mentality, then you don't need to have a stop loss. Now, a lot of, you know, very knowledgeable traders, they don't believe in stop losses. They think that stop losses are a sham. They're put in place by the big hedge funds and institutions to tell you, okay, put a stop loss to manage your risk, but then they know where those stop losses are, so they're going to make sure that they do a stop hunt and take you out. That's how people lose money. But if you're in front of your computer, you don't need a stop loss. Okay, just watch the market, wait till it goes down, and then get your 20 points. Okay, now see, here's another example right here. When it came from oversold, it crossed over here. Now it's been going down this whole time, so eventually it's going to keep retracing, and you can still get those retracements here. So let me go to the beginning of this trend. If my computer was faster, I would have been able to do this way better, but unfortunately that is not my luck today. So okay, so the trend started here. Okay, and this is an example of, you know, you wait for it to cross over, but see, in trending, significantly trending markets, stochastics doesn't work. So you want to wait it out, wait for a good retracement. But how do you know? One of the ways you know that a retracement is going to occur? Number one, support and resistance. Okay, so let's look at where the support is for this, where we think this downtrend is going to stop and continue. Okay. Ugh, this is so slow right now. It's not even funny. Okay, come on. Oh my God. Okay, so sorry guys, I don't know why my computer is doing this right now. I honestly don't, and it's pissing me off. Oh God. Okay, so see, I think we were here. It froze and then it just lost where I was. Okay, so right around here, you know, this downtrend is going to start retracing somewhere. So support and resistance is one thing. Another thing, and it's very, very powerful if you listen to me right now, is engulfing pattern candles. Candles that show evidence that it's going to retrace the other way and continue eventually. Okay, so I don't know where I was. So I'm just going to pick up right here. Okay. Here, this came in a downtrend. This is obviously a downtrend because this is moving averages are going in a downtrend, and then comes down here. Now look at your candlestick patterns, folks. Okay, look for engulfing patterns to see when trends are going to end and when they're going to retrace. Over here, you're looking for retraces. All right, and also see when it right here when it touched here, it started retracing here. This right here. If you had found this candle, and I wouldn't have taken this trade, of course, I'm just trying to illustrate, that's a 17 pip retracement. All right. Now this 1 hour crossed over right here. Okay. But remember, it's a downtrend, so preferably take downtrend trades. All right. For example. Oh, come on. Okay, so see, for example, it came down here, downtrend, and it crossed over right here. Okay, close to the overbought section, it went down, it crossed over right here, meaning you would take a sell opportunity. And let's just be conservative and say that you took it right here and you wanted your 20 pips. That 20 pips you would have been accomplished right here by that little move right there. This in 3 candles in a half an hour, you would have accomplished 20 pips, and if you had $10 per contract, you would have made your $200. Okay, 20 pips. Okay, and if you wanted to stop loss, you wouldn't have been stopped out because your stop loss would have been here somewhere. Okay, and then what you want to do is keep looking for more selling opportunities to go with the trend. But if none arise, then you want to look for end of the trade. So you want to look for engulfing patterns, engulfing candles. So you have many engulfing candles here that'll kind of clue you in on whether it's going to go up or down. But the more significant the candle, the more likely it's going to go back up. So for example, here, this is an engulfing candle right here. Let me zoom it in a little bit. Okay, so it came down here. None of these are engulfing. This is kind of engulfing, but it's still small. These candles are small. And then Man, oh man, I can't friggin' do this. My computer's just going really slow right now. I'm sorry. See, this is an engulfing candle, but these candles are still small. Okay. This is engulfing, still small. This is engulfing, still small. But then, see, all these are happening, but then, see, still came down. But look at this candle. This candle came all the way up. I still wouldn't have taken a trade. I'm still waiting. Okay, you can in fact still wait till you get another crossover right here. Okay, so this red pretty much for the first time crossed over and had some sort of a gap. Okay, and once it starts gapping wider and wider is when you want to start looking for buying opportunities. So see, all this whole section here, it was really narrow in between the lines. So you want to be patient and wait till it crosses, and that creates a significant gap. So right around, once this starts moving again, right around here, let's say you said that, okay, I have a good buying opportunity, let me just buy it because I don't think it's going to go down anymore. You would have bought it, and it would have first went down about 21 pips, meaning if you bought a $10 contract, you would have been down $200. Now that doesn't mean that you lost $200. Let's say if you have $1,000 in your account and you do $10 per pip, which I do not advise. If you have $1,000 in your account, you should start with maximum $5 per pip, maximum. All right. So you have 23 pips here. You would have been down 200 bucks right here, but then it does go in your favor. Okay, so it does go up to your 20 pip, your rationing, right? So you want to get it to 20 pips as soon as this thing starts working. So right here, you would have got your 20 pips by this candle right here. Okay, 20 pips, and that's your 200 bucks right there in the matter of 16 times 5, so several hours. Okay. And then you can just pretty much do that all day. So I'll see you here again. It crosses, because remember, usually never, a trend will follow another trend. Okay, it's usually trend, consolidation, trend. Okay, that's usually how it works. So then over here, it crosses over, and the stochastic strategy works really well with ranging markets. So when it crosses over here, you tell yourself, okay, I'm gonna sell now. So you sell, get your 20 pips. Move off. Ruining my shit, ruining my party, man. Alright, so another 20 pips. Right here, about this green, not this green candle, this red candle right here. Okay, about 7 candles away, and these are all 15-minute bars. Okay, 7 candles away, you got your 20 pips, you got your 200 bucks. All right, so, and then keep in mind support and resistance. Now you can tell that this came up here and it resisted. See that this wick, it resisted, meaning that it's likely going to go down at some point. All right, so this is a point of resistance, going to go down. All right, and keep in mind engulfing patterns. See this? They came down here. This engulfing pattern came. Okay, now it came up here. No engulfing patterns here yet. Here's an engulfing, but it's a fake out. But then it came back here with an engulfing right here. All right, but then it retested this resistance. Now I'm being less motivated right now because my computer's going extremely slow and I'm getting really pissed off. So I'm trying not to, oh my god, shut up. Sorry, if you guys can't hear that alert, then I have an alert that keeps going off. Okay, so see there's resistance right around here. So when it comes back up here, you look for the engulfing pattern. Here it is, and you make a sell order right there. Okay, and then you look for another engulfing. It doesn't engulf here, but it is a large green candle. You wouldn't have taken that trade because it's not an engulfing or it's not hitting support or resistance yet. You're still establishing support. So let's continue. Let's show you another few examples. But I think you guys get it, because right now my computer's going really slow. I'm not really sure how I can continue without me just losing my grill. Okay, so let me show you another crossover right here and another 20 pip take profit. Can you please just shut your mouth, you fucking alert? Again, pardon the expletive, but I am on my last nerve right now. Oh my god. God help me. Okay guys, I'm gonna have to stop this. I can't take it anymore. I'm just dying. So thank you all for watching. I know you guys are gonna have questions. Actually, you know what? It went away, so let me see if I can still do it. So right here, crossed over again. And let's just say you took the trade here to buy for 20 pips. Limit order 20 pips. Okay. Let's see how many candles it took you to get there. Okay, this is 10 pips right there. And you wouldn't have been able to get to your 20 pips. It would have been at 15 pips. But then remember, folks, you don't have to wait for 20 pips. All right. Once you start seeing it go up and down, you want to kind of exit, as soon as you get to the point where you're satisfied with your profit. 20 pips is you're good with 20 pips. But if it gets to 15 pips and it takes you 5 hours to get there, then it's not worth it. So if it gets there and 10 candles or less, then great. But if it's ranging up and down for 10 candles and eventually it gets to 15 pips after the 11th candle, 12th candle, then exit it. Don't wait for your 20 pips, all right? Because the point here is you want to get in and out of the market as soon as possible. All right, so here's another crossover right here. So let's just say you took it here. 20 pips would be right here. Okay, after 17 candles, all right, at 15 minutes per candle, all right. Now imagine those people that are using this strategy and they can put down $100 per contract. That's $2,000 each move, right? But at the same time, if you're wrong, you can lose up to $2,000 too, through 1,000, 3,000 if you don't put your stop losses in. See, it crosses here again. Folks, I mean, this is an easy strategy. This is such an easy strategy. It's just, okay, folks, I gotta stop this. I'm gonna throw my computer now. Hopefully you guys enjoyed it. Write your questions down. If I've forgotten to put this indicator in our group by the time you are seeing this, then remind me, please. This is free, of course. I love you guys, and I want you guys to have the best. So, good luck.